What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is day number 18, May the 3rd, 2023. We made some trades today, so let's get into it. So, today was a special day because today the Fed announcement came out. So, that always has a big impact on the market, not only when the announcement comes out, but also in the morning during that session. So, I've traded a lot of FOMC days, and there'll be occasions where it'll be a big trend in the morning and a big trend in the afternoon. But there are occasions where the market could be stuck within a range, a volatile range, and then maybe try and break out when the news comes out at 2 o'clock. So that's what happened today on the Fed data we traded right here. So let's get into these trades and let's talk about what we saw today and what our thinking and our thoughts were on this particular session. So let's start at trade number one. So this was in the pre-market, but I actually had this zone established. It went back all the way probably to about 6 o'clock this morning. Now, when prices pushed back into the zone, I went long in expectation that prices would go back to the top of the zone, and that's where I took my profit. So then let's talk about when the market opened. Now, when the market opened, we sold off, which let's go back to yesterday's session. This was yesterday. The same thing happened. We sold off in the morning. So that's just interesting because if you guys remember last week, almost every day last week, we started off with a big spike to the upside. And every day this week so far, we've started out with a big spike to the downside. So that's just something interesting to take a note of. So once prices finished that spike, they established a zone down here, which led me to my second trade at trade number two, where I shorted at the top right here, which was a fantastic entry. I drew the zone perfectly. I traded in line with the trend. The overall spike was down, so I'm looking for a second leg down just as a retest of what just happened. That's usually how it goes. So everything was good. My entry was great, but I just didn't hold the trade because I didn't believe in my analysis enough. And I think that comes back to just having better practice sessions. The better my practice sessions are, the more confidence I can have in my strategy going into a live session. So I think that's on me, and that's something I can work on. Just look, you have a good setup, you have to believe in it and accept the risk that comes with it. You can either make money on your setups or lose money. That's always a possibility, but you just have to accept the fact that more times than not, you'll make money rather than lose money. So, gotta accept that going forward. So we see that prices eventually came back down to the bottom of the zone, created this triple bottom, if we want to call it, had another higher low, and then from that point forward, moved higher back up to today's high price, at least for that period in time. Now, I also want to talk about these levels on the chart before we go any further because I know it might seem a little bit confusing. So let's talk about one. We have a zone up here towards the top of the range. This was the purple zone that I was talking about that I drew from the pre-market. Now, this zone was established once the market opened and we had that big spike that led to one touch, two touches, three touches, and then the fourth touch, which eventually led to the fifth and final one. And then this zone down here got drawn once prices spiked all the way back down from trade number 7 all the way down to the blue zone. We created one touch right here on this candle. We came back, second touch, third touch, and then from that point forward I drew a zone. So those are the zones that I'm trading through today and trading around today. And also this orange line represents yesterday's closing price, which was 33,772 if I'm not mistaken. So those are the lines on the chart, and those are the levels that I'm using to go back and forth and base my analysis and my trades on during this session. So back to trade. So back to trade three. So as we see prices break past yesterday's closing price, we see a bear spike to the a bull spike to the upside where we have 1, 2, 3, 4, 5, 6, a 6 candle bull spike. I get in once prices push through the top of the zone with pretty much the same idea that I had from trade one. I'm expecting prices to push through the zone and come back and test the top, and that's exactly what happened right here. Now trades 4, 5, 6, and 7 are just all mistakes that can definitely be cleaned up by me. So let's talk about trade number 4. So I thought I was going short right here. Notice how my entry was right here, but really I went long. So it was just a technical error by myself, and that's on me. You know, if I take thousands of trades per year, it's just a matter of time before maybe on one or two of those trades I have technological difficulties. So that's something that I can plan for and expect. So if I know that that's a possibility, then I might not be able to control that specific situation, but I can control what comes after. So trade 4 was just a loss that I had to take. Now trades 5, 6, and 7, those were more so revenge trades because I was just mad that I had the initial direction right, but I pressed the wrong button. So that was very frustrating. And I tried to come back and make all of that back immediately, and that's not really what you want to do. You always want to wait for the market to give you the best opportunity possible. So notice how on trades 4, 5, and 6, I had the very exact opposite idea of what I did at trades 3 and trades 1. Trades 1 and trades 3, I'm seeing prices come back through the zone, and I'm expecting them to come back up to the top of the zone. Now on trades 4, 5, and 6, because I saw this, I guess you could call it a double top and then a higher low, I was expecting for prices to continue down right here. But what I should have been thinking was that if the market has been in a range all day, then more than likely it's probably going to establish another range somewhere else on the chart. And that's exactly what happened. So if we look at this swing high from trade 3, come back down to the swing low for trade 4, look at the swing low for trade 6, the swing high for trade 5, we could really draw us a nice little box and consolidation zone around there. So if that was the case, then look at where I went long, look at where I went short. If I'm gonna go short, I need to short from the top of the zone and the top of the zone only. I don't want to short from the bottom of the zone or from the middle of the zone because those are just low probability opportunities, and those are not the trades that I'm really looking to take right now. So I think that's where I went wrong on this entire cluster through 4 through 7. Now on trade 8, I finally was back on the right side of the market. So let's talk about that. So on 7 and 8, I shorted the top of the zone on trade 7. I was too early, but I took the same trade on trade 8 for a profit. So basically the opposite of what I was thinking at trade 3. I was way too early on 4, 5, and 6, and 7, and then finally caught it on 8. But of course 8 is nowhere near enough of a profit to cover the losses that I took on 4, 5, 6, and 7. So that's just a mistake and bad decisions by me, but I can clean that up most definitely. And then right here, it's not marked up, but I did go short right here, expecting for prices to break back through yesterday's closing price right here at the orange line. But when I realized that prices were continuing to move up after they made this double bottom on top of the zone, that's when I exited my position, and I think that's pretty much a break even loss right there. Now trade 9 is interesting because when prices came back up to the zone, I used the same line of thinking that I had on trade 3 and on trade 1. I see prices coming back up to the zone. They establish a double bottom with a higher low, and now they're pushing up. So I'm thinking, okay, they're probably coming back to retest the top of the zone. Well, they didn't retest the top of the zone exactly. Let's zoom in a little bit. They came back to retest maybe the upper part of the entire range, but not the exact highest price. So that right there, this candle, we can consider the push through that had enough momentum to bring prices back into the zone. So in a lot of scenarios, you have to remember that price action is also important as well. It's not just the chart pattern. So in this case, it's not just the consolidation zone that is the end all be all. The first thing I want to make sure I do is study price action and then look at how my zone relates to the price action on the chart. I think I was doing it today. I was doing it the other way around, where I'm looking at the zone and then basing the price action based off of the zone, when really it should be the other way around. Price action first, chart patterns next. So the reason I went long right here was I had the same idea as trades 1 and 3. But if we look at trade 7, that actually established a swing high for that entire up move that we had from this bottom at this zone from earlier in the session. So if that's the swing high, we came back, had our first swing to the downside, came back up here and created a lower high. So once that lower high was created, I should have been able to identify that, and as soon as I identify a lower high, I try my best to not go long off of a lower high or against a lower high. So that was my mistake on trade 9, just bad trade identification, because I was thinking that, yeah, I know that the trend is probably going down from here because this is a major level of resistance up here where this swing high at 7 got created. But I'm thinking at that time that prices would come back up, retest that level one more time, but that just wasn't the case. But luckily I was able to realize my mistake and I closed this trade out for a small loss rather than taking a full stop loss on that trade. So as the prices come back into yesterday's closing price as well as the top of the zone that we drew from earlier when the market opened, that's when I got back on the right side of the market. So I'm like, okay, lower high after a swing high at the top of resistance for the day. So I'm expecting that prices get back to yesterday's closing price and just pretty much shoot through all the way down to the bottom of the zone. So that was my idea on trade 10, but I was a little bit too early. And as a matter of fact, if we take a deeper look at that, look at where I went short. I went short right here at the orange triangle. So technically, I didn't get stopped out until prices came back to my break even on this candle right here. So I had profit from yesterday's closing price down to the bottom of the zone, and we pushed through the zone a little bit. I think that was at least, let's see how much that was. Okay, let's go across. So around 750, 752. So I could have got my 20-point scalp target out of that trade right there, waited for prices to come back up, and then when they spiked back down into the zone, took trade 11 like I did right here, and been able to have more of a profit right there. So I just think it's the little small things like trade number 10, a break even trade where if you just glance over it, you could say, yeah, okay, break even trade, okay, keep moving. But that's actually a trade that could have been profitable. So I want to focus on the small things like that because they make a big difference at the end of the day. So when it comes back to trade 11, we talked about that. I took the short once prices spiked back through the zone. And then I also took the short as prices pulled back in the zone. And I'm expecting prices on trade 12 to come back down to the bottom. Now you could look at 11 and 12 and say, okay, I anticipated the downswing back down to the bottom of the zone. And I was able to take two trades that captured that idea. Now, that is what happened, but I also dropped the ball on these trades. These were not the best executions per se. It wasn't really any real reason for me to get out of my position at trade 11 when prices came back down to this low. If prices are back into the zone after the price action patterns are already clearly down, we are in the channel. If you draw a channel line from the top of candle 7 connected through this swing high and higher low at trade 9 and extended throughout the rest of the session, we were in a clear bear channel. So it's really not any reason for me to get out of that trade at that point. The only reason was I was taking losses up until that point in the market, and I just didn't want to see any more of my gains go away. But it doesn't matter what I've done before and what I'm going to do after any specific trade. What matters is that one specific trade. I need to treat each trade as an individual event because it is. So the lesson that I learned on trade 11 is to just hold the whole thing. My idea was right. My idea was that we would break past yesterday's closing price, break back through the zone, and come all the way back down and test the bottom. So that was my idea. I have to be willing to sit through the potential pullbacks that could happen. Because here's the thing. When I catch my scalp targets, the 20-point quick little scalps, most of the time they go straight to my profit target and I don't have to wait through a pullback. Now when I'm trying to get and trying to attain bigger trades, like instead of a 20-point scalp trade, let's say I'm trying to, in this scenario, I think this zone went from 65 to 25. So that's a 40-point zone. So it's almost double what I'm usually trying to get from my scalp target. Usually the further out your profit target is, the more likely it is that you'll have to sit through a pullback, because the market usually doesn't spike up to one price. It'll make its way up, pull back, and then continue up to that price. So in this scenario, we're not just going to necessarily have a spike all the way down on one candle. It'll spike down for a little bit, create a swing low, pull back, create a lower high, and then the downtrend continues. So just a little note right there. If I'm looking for a bigger profit target, I need to be willing to sit through a pullback. That's just part of being a swing trader. So even though 11 and 12 were profitable, it still wasn't the best execution by me. And that's what I'm trying to do. I'm trying to not necessarily focus on the dollar amount, but focus on making the best trade for every setup that I take. I want to have a great entry, a great exit, and I want to make sure that I manage the trade properly while that trade is open. So that's very important for me and something that I can definitely work on going forward in the future. So let's take a look at trade number 13. So 13 through 16, I went long expecting prices to push through the zone. I was wrong 4 times in a row right here, and my decision making could have definitely been better. So when prices came back into the zone, I went long. I had a profit. I could have took that when prices came back to where they were at the swing high from 12, because honestly that would have made sense. If we look at the bear channel, that channel line comes directly up to where the swing high was for this entire move off the bottom of the zone. So I think I saw that when the market was open, but I was just so butt hurt from the losses that I took earlier that I wasn't willing to accept what the market was giving me. I said, market, you gonna give me more than this. I'm not settling for this 15 points. I want 20, 25, 30. But that's another lesson right there about taking what the market gives you and not trying to force something that's not there. So on trade 13, that ended up being a break even trade, which is fine. But then for me to come back on trade 14, go long from the same price, have it not work. Come back on trade 15, go long from the same price again, and it didn't work. And then do the same wrong decision on trade number 16. That's just completely terrible trading decisions right there. I should not be doing that. That is not something that I can do over the course of a certain time period and be able to sustain consistent results. That's just a losing strategy. Plain point simple. So let's talk about our next trade. So after all of this happens, I was expecting prices to actually create a higher low. So I thought this up here at 13 above the zone was the higher low, but that really wasn't the case. The higher low had not been established quite yet. They tried to make one right here, but they failed and eventually came back all the way down to where the zone was drawn from the original low from that swing low from earlier. We push up, push back down, create a triple bottom. Now I went short at 17 in expectations that prices would come back and hit the bottom of the zone, which they did. Now my exit on this trade was fantastic. I got out right there at the bottom of the zone, but my entry was a lot worse than it should have been, because look at how prices entered the zone. So this is the first time they came back into the zone after this little fiasco over here. So they came back through on a wick, pulled back up to what used to be the bottom of this zone right here. Didn't quite touch it, but it came close enough. Then they came back into the zone and reclaimed that level once again, shot out of the zone one last time, and then immediately on this candle came right back in. So on this push right here, if I didn't get in once prices pushed back into the zone, I should have definitely got in once they pulled back and tried to retest the top of the zone right here. So I waited a little bit too late, and I probably left about maybe 10 to 11, maybe 12 points on the table that I should have profited from. So that's just not my best trading right there, where I'm having good trades, but they're not as good as they should be. And that's just a problem, because me not being able to capitalize on my winning trades is actually hurting me in the long run, because now my losing trades are having a bigger impact because I'm not able to weather those losses as strongly as I should. So that's really what I want to focus on and work on. So let's talk about our next trade. It's not marked up, but we can see it right here on this candle. So I believe I went short right here in expectations that once prices came back into the zone on this candle, that they would continue after they retested it and come back down. But that's just not the scenario in this case. Instead, they created a higher low in comparison to where we came from this triple bottom. So we have a triple bottom and then a higher low and then a retest of the higher low. So this is actually one of my favorite chart patterns, which is we have a downtrend reversal, a higher low that gets established, and prices usually move up throughout the rest of the session. And lo and behold, that's exactly what happened today. So once again, when we go back to talking about making the most out of our trades, trade 18 was a trade that I should have held for the rest of the day. Usually the downtrend reversal with a higher low that gets established, like I would say maybe 65 to 70% of the time, it leads to an uptrend for the rest of the day. So if I don't see any real signals that tell me that I need to sell when I take a trade like 18, then I just need to hold that trade, because I could have caught about another 100 to 120 points just by holding this trade at 18. So that's something that I definitely need to work on. And I think it just comes down to believing in my strategy. I know my strategy works, but it's still this little inkling of doubt in my mind where I'm like, wow, is it really gonna work like this? You mean to tell me I studied and the market is doing exactly what I studied? Nah, it can't be true. But it is. That's what happens when you put in your work. So it's not just about putting in the work and having a good study session and understanding what you're looking at and what you're trying to get. It's about execution when it comes down to the moment. You can't just think about it. You got to think about it and you got to be about it. So that's the lesson that I'm learning from this morning session that I traded today. So let's go ahead and move on to the afternoon session. So when the Fed announcement came out at 2 o'clock, the market got extremely volatile, which we see with this big, huge volume spike. Notice how at 155, 145 leading up into the news spike, volume was relatively low. Now, it was still like 300 to 400 contracts being traded per minute. But then when the Fed announcement came out, it was just a dramatic increase in volatility, which usually happens on a Fed day, and it provides a lot of opportunity, which we'll talk about right now. So let's get into it. Notice how even though the afternoon session was hours later after the morning session, all of the zones that we drew from the morning are still holding up perfectly. So I continue to use those zones throughout the rest of the session. So let's talk about trade number 19. So on trade number 19, I think let's go back to the morning session. So I had the same idea that I had from trade number 8. I'm expecting a false breakout to the upside, and then when prices get back into the zone, I want to play that false breakout and expect prices to come back and retest the bottom of the zone. So I use that same concept from the morning session on trade 19. I took it once I saw prices have this big spike to the upside, no continuation, no follow through. They came back into the zone thinking they'll at least come to the bottom of the zone. As a matter of fact, they came all the way back down to yesterday's closing price, which made sense because if the volatility is really that high, they're not just going to stop at the zone. They'll push all the way back down to a more important level of support, which is yesterday's closing price, which always makes a big difference in the market, no matter if it's a Fed day or a normal day. So then we see prices just bounce back into the zone and just create a new zone, really. So the new zone, we could call it from the top of what used to be the green zone to what is the top of the highest most point at the purple zone. Now let's talk about trade number 20. So when the price pulled back to yesterday's closing price, I was expecting this zone down here where all of these wicks are located to hold up. The only thing was I was a little bit too early on that long trade. So they pretty much spiked right through that price and gave me a loss pretty much automatically. So that's telling me that I was definitely wrong. And then look at how we come back to the bottom. We have a wick that touches off of it perfectly, which only validates the zone even more. Then that's going to make a difference later on in the session also. But look at trade 21. I expected, well, let's read the notes. I took this short on the second test of the zone instead of the first. And that's one thing that I definitely learned throughout this session is that if you expect prices to push through the zone and then come all the way back down, you need to catch it on the first push. If you're trying to catch it when prices are coming back up for a potential second push down to the downside, you're just decreasing your odds of success. Now, there will be some occasions where that trade does work, but most of the time, you want to catch your first setup, not the second one, because the probabilities are just lower. So on trade 22, I flipped my bias to the long side once I pretty much realized that we were in a bull spike. So I went long at the bottom of the zone, expecting prices to push up to the top of the zone. But I closed my trade a little bit too early and I missed out on taking profits back up to the top of the zone. So that's something that I've actually been having a problem with not only this week, but last week also, where I have good trades, but I'm not having enough confidence to hold them. And I think it's because a lot of times I'm not willing to accept the risk that's associated with that particular trade. But if you want to take your best setup, you have to accept the risk that comes along with it. That's just a part of the business. So that's something I have to work on also. Now, trade 23, I went long expecting that once we broke out of this overall zone at the top, I'm thinking if we spiked up when the news eventually came out, that's the buyer showing us what they want to do. So I'm thinking that, okay, once we get back to the top of the zone, that should act as support. The breakout should be respected and we should continue up to the upside. But look at what happened. We had a double top up here. And then once I saw that, I pretty much got out for break even at trade 23 because I said, look, it doesn't seem like it's any more buyers left in the market, so let me get out. Good decision by me right there. Then we come back to trade 24. I pretty much used the same idea that I had from trade 21, except I said this time I'm going to get in early when prices are spiking through the zone. So I tried to catch it early. Let's zoom in a little bit. So instead of waiting for prices to come back through the zone completely and close inside of the zone, I anticipated prices getting back into the zone, and I shorted right above yesterday's closing price, which was just a little bit of a premature move by me. I was waiting for a scenario, but I didn't give it time to play out. But on 25, when prices spiked back through that same entry price that I took from trade 24, that's when I went short on trade 25, and I was able to hold it from yesterday's closing price right above that all the way back down to the bottom of the zone where we had this wick that got established. So remember I was talking earlier about how this wick touching the bottom of the zone completely and perfectly pretty much validates the zone even that much more. So that's the reason I got out at trade number 25. I initially expected prices to come all the way back down to the blue zone, but I said, I don't know if I want to hold on to the trade for that long. And I think that was the right decision because I made a good 40 to 45 point chunk off of this trade right here on trade 25. So I've learned that when you have a good trade in the market, you don't really want to double dip. You get what you came there to get, and then you wait for the next best opportunity in the market. So notice how after trade 25, we came back down to the blue zone, which we established in the not in the pre-market, but earlier in the morning session. Once we hit that blue zone, prices came all the way back up with no pullback. They came immediately back up to the upside. So anytime you see moves like that in the market where you pretty much go straight down, you come straight back up, the probabilities of a range being established increase dramatically because both sides in the market have shown what they want to do. Buyers showed that they have strength, sellers showed that they have strength, and now it's about to be a back and forth between both of those sides to determine which side is really going to make the market start trending in their direction. And when you add in the fact that we were already in the trending market before this movement happened, it only increases the probabilities by more. So after we see prices break out of the top, look at where they came back to. They came back to pretty much retest the spike that we had at 2 o'clock when the Fed announcement came out. So I pretty much used the same idea that I had from trade 19, expecting a false breakout of the top side of the zone that we really haven't been able to break all day. So once I saw that big spike to the upside, and then I saw no continuation on the next candle, and then follow through to the downside on the candle after that, I said, okay, I feel like this is a false breakout. And if it is, if I think it is right now, let me just anticipate, catch it early so I can make more points off of that. So I took the short trade from near the close of this candle right here, and I held it all the way back down to the bottom where I also got out at trade number 19. So just following my trading plan right there. Then we see prices pull back down to the bottom of the zone once more, come back up, retest the top of the purple zone, and then at trade 27, I was pretty much expecting the same move that happened at trade 25 and the same move that I was looking at from trade 21. So I was a little bit early on 27, got stopped out for break even, but then came back on 28 and caught that same trade, took it back down to the bottom of the zone just like I did on trade number 25. So even though I took a whole lot of losses today in the morning session, I was able to come back in the afternoon and have these 3 good trades. Well, really these 1, 2, 3, 4 good chunks right here. These great trades that got me back into positive territory. But I think, that's a good way to finish the day. I'm glad that I didn't finish with any losses and that I made a profit. But I can't go forward with that type of performance and expect to be consistently profitable, because I was down big in the morning. Luckily today was a Fed day, so I had an opportunity to make all of that back. But what about if this was to happen on a regular day? It's going to be tough to make back all of those losses. So I either need to be more respectful of my loss limits or learn how to, I need to do both of these things. Be more respectful of the loss limits and take better entries. I think my problem was that I was over trading a little bit, and straying away from the entries that I know have a great chance of being successful for me. I was more so trying to take trades in anticipation based on what the price action was showing me. Like, ooh, I think that this move could happen, so let me try and get in and anticipate that move before it actually occurs. That's not really what I'm here to do. I have certain chart patterns and setups that I'm looking for, and I have like 9 of them. So if the market doesn't fit into any one of those 9 categories, then I can just sit back and chill, observe the market and see what's going on, and then wait for the market to give me the opportunity that I'm waiting for. I don't have to take any trade that I don't like. There is nothing forcing me to do that. The decision is completely up to me. So I need to be better in my decision making, and that's one thing I definitely learned today. Let's see what else. What else can I learn? Let's go back to the morning session. Let's see what else. What else? Really, overall, when it comes to zones, I would say that I need to focus on defining what ways I want to play the zone more distinctly and in more detail. I know the 2 ways that I like to play the zone now is to short from the top or go long from the bottom. And I like to pick which one of those I'll do based on which direction the prices were moving before the consolidation was established. So if it was a downtrend and we established a consolidation, I only want to short from the top of the range. If it was an uptrend, we established a consolidation, I only want to go long and go and buy from the bottom of the range. That's it. And then I also want to add the false breakout to my wheelhouse because I've been trading that over the past couple of weeks with a lot of success because it makes sense to me. Most zones have a tendency to continue staying within that zone, and most breakouts have a tendency to fail. So if I see signs that say that the breakout is about to fail, then I want to trade that and potentially ride prices back down or back up into the zone depending on the situation. So I think that's the trade that I want to add to my wheelhouse. So I'll ultimately have 4 different ways to trade. I can short the top, I can go long at the bottom, or I can short after a false breakout to the upside, or go long after a false breakout to the downside. Other than that, I really don't want to play the zones any other types of ways. And I would say today a lot of these trades were more so anticipation trades rather than waiting for exactly what I need. And then the other big lesson that I would say that we talked about earlier that I really want to focus on is that price action always comes first. I'm a price action trader. I read the price action to help me determine which way the market is moving, and then I start marking up and charting up on my chart to figure out where exactly I want to put certain zones, channel lines, resistance, and support levels to help me have a better vision of where I'm trying to go based on the price action. So I think today I was putting my zones first instead of the price action, but I got to remember that price action comes first. So I think that's really the most important lesson that I took away from this morning sessions and from this afternoon session. Price action first, chart patterns second. Use your chart patterns as a way to confirm what you're already seeing in the price action. So I think that's what I need to focus on going forward in the future. Price action first, chart patterns second. Focus on your trades, believe in them, be willing to accept the risk that comes with your best trades, and don't overtrade. Look for what you want, be a sniper in the market, and take what you need, and everything else, let it go. There's somebody else in the market that's going to take that trade and make money, but it's not me. So I appreciate you guys for tuning in with me today. It's day 18. So that means that tomorrow is day 19. So I'll see you at 9:30 sharp. And until then, you guys, take it easy.